Welcome to Framework Fortune. I'm your host Ben, and in this video we're going to dive into the Thinkorswim platform and go over the types of orders you can use and how to set those up. If you are using a different platform, most of this is still the same with other platforms. Might not be the same way to get there, but the orders will be the same. So there's still some value in here even if you don't use Thinkorswim. If you're new to the markets, before 9:30 a.m. Eastern is considered pre-market hours, and after 4 p.m. Eastern is considered after hours. And in those times, you can only use limit orders. You cannot use market orders. So if you don't know the difference between a limit and a market order, I'll go over that right now. A market order will guarantee that your order gets filled, but it doesn't guarantee the price. So if you hit buy market, you're going to be in that stock. You are going to buy some shares, whatever amount of shares that you've put in of that stock guaranteed. But you don't know what price you're going to get filled at. So it guarantees the fill but doesn't guarantee the price. A limit order is the opposite. It guarantees the price but doesn't guarantee that your order will get filled. So for example, here we're looking at Rocket. Right now it's at this $28.90. If you put a limit order in, say at $28.50, and the price never reaches $28.50, well then your limit order is not going to get filled, right? But this is after hours. You would have to use a limit order. If it was during market, you could hit market and you would be right in there, and you might be up a little higher than this $28.84. You may be getting filled at $29. You may be getting filled at $29.20. Could get filled a little bit lower. It depends. This stock has a little bit of a spread, so when you mark it in and there's a spread between the bid and the ask, you're going to get filled on the bid, somewhere in between the bid and the ask, or on the ask, and those prices change, so that's why you really don't know exactly what you will be getting filled on. Now, depending on your strategy will depend on what kind of orders you use. Because I primarily day trade and I'm trying to get in and out of stocks quick, I use market orders because I want to be guaranteed that I'm getting in before the rips and I'm getting out at the top, or at least try to do that, right? So looking here, I already have mine set up, and this whole thing is called the AT ladder, and then on Thinkorswim these are buttons. So the first button I have is the buy market. Like I said, I'm a day trader mainly, so I want to get in and out of stocks. We are in after hours, so this is not going to fill, but you can see it put the order in, and then same thing with the sell. And then I have buy the ask, join the ask. Both of these are going to be limit orders. So if you buy the ask, you can see the limit is in there, and it's going to be whatever the ask price is at that time. It's going to place a limit order for that price. All right. So you might not get filled, you might. And then you have join the ask, which is a sell order, and it'll put in a limit order. But I don't have any shares of this, so it's not going to work. But you get the point. Buy the ask is buying on the ask, and join the ask is selling on the ask. And then you have other buttons, and to change your buttons to however you want, you just click the settings here. Buy bid is going to be the same as buy ask, except instead of putting a limit order in at the price of the ask, it's going to put a limit order in at the price of the bid. So if you're using limit orders a lot, that may be an idea to use. And then you can see buy market there. You can put cancel all as a button in there. So if you've got maybe multiple orders, and we're going to dive into how you can set up multiple orders at once, you can just hit cancel all to cancel all the orders. And then you can see that's pretty self-explanatory there. At cancel all buy, cancel all sell. So whatever buy orders or sell orders you have in, you can hit that, one of those, to cancel those. Or you just have regular cancel if you're only using one order at a time. So flatten is kind of like a sell market order. It's just going to try to get you out and flatten your position effectively to zero. I don't really use that because I have the sell market. No really reason to use that. Then you've got your order template editor and order template selector you can put in. Position indicator, quantity, and right there's my quantity. You can change these quantities to whatever numbers you want. And I'm not really familiar with reverse orders. Don't really know what that's going to do. Never really cared to find out, because with all the other type of orders that you can use, you don't really need that extra. That just seems like more complication. Then you can see sell ask, sell bid. So same thing as the buy ask, buy bid. You're going to be selling on the ask with a limit order, or selling on the bid with a limit order. And then there's the sell market, which I have up there, which is going to automatically fill you. And then TIF, that's going to be depending on the time of day. During market open, you want day on. If it's after hours, pre-market, you want good till cancel. extended hours, and that's what this is, GTC, extended hours, and this will allow you to trade in pre-market or after hours. So let's talk about the AT ladder now. Now the AT ladder is going to be this thing right here. All right. And you can see it's got the price of the stock, and you can see bid size, ask size, and you can see volume over here. This AT ladder acts kind of like time and sales and level 2 and the volume bars all in one. Some people can trade right off of this. I don't really do it because I like to see these nice green and red numbers. Helps a little bit with telling the buys and sells and how much pressure and the price action, but you can use this. So above the current price, and you see the current price is in that $1.14, $1.15 area. If you look over here, you have stop limit orders, right? So if you're buying in and you want to buy in a little bit higher, you can put in a stop limit order. Now I'm not going to put one of those in because I will get filled higher, because I do have the good till canceled on there, and somebody will definitely come in and sell me their shares. If they're selling them for $1.15 and I put that order in for $1.17, they will be happily ready to give me their shares. So we're not going to do that. But if you go below the current price, you can see they're not stop limit orders, they're buy limit orders. So current price is $1.15. Let's put a buy limit order in right here at $1.12. So that order's in there at $1.12. If the stock comes down to $1.12, we would get filled. Most likely, the stock's not moving that fast. If it was an extremely volatile stock that is dropping up and down really quick, your limit order can get skipped over. So be aware of that with limit orders. The one thing I love about Thinkorswim that most other platforms don't have is once you have an order in like this, you can actually move it up and down. So I can move this down to say 94 cents, right? So see, now that order's reprogrammed and it's in there at 94 cents. That's pretty nice to do when you're day trading and you're trying to move in and out of plays fast. You can take and put a stop loss under somewhere, and as the price goes up, you can just grab this and move that stop loss up and be able to have your stop loss keeping you safe. So on the ask side, it's kind of the opposite. Above the current price is going to be sell limit orders. So it's at 115 and you can see sell limit. Below the price is going to be stop loss. Let me bring this over so you guys can see that. So you see sell 1 stop L, that stop loss above sell 1 limit. So the stop loss is not a limit order. The stop loss order is going to be a market order. So if you put your stop loss in, say it's at 115 now, you put your stop loss in at 110, all right, that order will trigger when it starts dropping below 110 or at 110, and you will get filled guaranteed because it switches to a market order, but it won't guarantee the price. So just because you put a stop loss order at $1.10 doesn't necessarily mean that you will get out of the stock at $1.10. Like I said, if it's really volatile, you may be getting out of the stock at $1.08, $1.07, even lower possibly, or higher. But I use these stop loss orders right here on this AT ladder for when I'm day trading and I want to put a stop loss in really quick. This is all interesting, right? You got your buys and your sells and your limits and your markets and how you can do that. But it gets even better. If you go to template, see, we're just using single orders. Now, one of the things I like to do is this TRG with bracket. But first we'll go to OCO. So this is going to be a one cancels the other. That's what the OCO stands for. So if you put in a buy order with a stop loss and the buy order gets filled, the stop loss will get canceled, or vice versa, however you're trying to use it. I don't really use these OCO orders, but just to show you here. Didn't realize that, but extended hours cannot be a part of the OCO group, so I just learned something new. Like I said, I don't use those orders. Let's put it back on day and see what it does. Okay, so it's on day. It's only going to fill during market hours. That's the only time you can use these OCO orders. So look at that. See, I learned something new. You learn something new every day. But you can see you got a stop there and you got a limit there. That probably doesn't work because the stop is a market order. If you were trying to get filled and you're waiting for the price to like drop down to this 114 area, so you got that limit order in there and then it doesn't, and it ends up coming up instead, and you're willing to pay a little bit more, well, then you have the stop order that can get hit. So if you're not exactly sure that it's going to come down to the price that you really want, you can have that little stop order in there a little bit higher up and still most likely get filled, just at a little higher price. So it kind of gives you a cushion, but if this order fills, this one will cancel. If this limit order fills, this one will cancel. So whichever order fills will be the one that gets filled, and the other one will cancel itself out, and there won't be another order. So you'll have to put a stop loss in or whatever you're using. So we take the OCO orders out, and now this is what I like. So we have this TRG bracket with bracket, all right? And this has got a limit order there, and you can see a stop loss order there as well. And you can change these. You can even change it to a trailing stop. But for now, we haven't got into trailing stops yet, so we'll just leave it as a regular stop. And if I go in here and I press the buy limit, and you can see we have multiple orders. Now this one's up really high, and the reason is because we didn't really program the prices. So let's cancel that and go back to it one more time. So that limit order is going to be offset by $1, and the trailing stop loss is going to be offset by minus $1. So if the stock drops a whole $1 per share, then you'll get out of this stock. You really shouldn't have your stop losses at $1 per share, because that's a very big stop loss. So instead, the average is usually probably 10 cents, probably what most traders want to use. And then you can see when we change that and we hit the buy limit, you can see we've got a 10-cent stop loss right there under that limit price at 114. And then this other order is still way up here, because that is going to be the sell order. So we go back to that one more time, to the bracket. Let's change this back to 10 cents, right? And let's say you're looking for 30 cents profit. You're looking for a quick little scalp on something. So you put 30 in there to the plus side. And there you go. You can see you've got your 10-cent stop loss in there. You've got your buy limit order at the price that you pushed on AT ladder. And then you got your 30-cent profit target right up there. So all three orders are in. If you get filled here, both of these other orders will stay there. But these two orders, the stop and the limit sell, are going to be OCO orders. So they're going to cancel each other out. So if you buy in here, you say you get filled right there at that 115 area, and then the price goes up 30 cents, this one will trigger and you would get out, and it would cancel the other order. So you can use that to be strategic if you're looking for 25-cent rips, or you're scalping and you're looking for 10-cent rips, but you only want a 5-cent stop loss. And you'll be able to set those orders up to be able to get in and out of plays and actually take a lot of the stress of trading off of you if you want to do it that way. Now you do have some other ones. You can see this right here. It's 2 brackets, so you're going to get twice the orders. So if you're trying to buy multiple positions and sell multiple positions, which to me this gets way too complicated. I don't see why really anybody would want to use this. So it's not letting me put one of these double bracket orders in at this time. Must be something to do with after hours. Like I said, this is pretty complicated trading, and I don't really see a reason why you need that. This one should be enough. It's basically going to be just double this bracket. Like I said, if you want to put in multiple orders, and then you got one with 3 brackets, which is even crazier. I mean, just looking at that gives me anxiety, so I don't know why anybody would want to use that. And I do have some programmed ones here. You can program them and save them. So 20-cent stop. So I've got the 20-cent stop there, and I got $1 profit. So if I was to click the buy order, you can see there. Once you actually change the numbers in your bracket, then you'll get this little save customization button there. You can see the little floppy disk, old school, and we'll put, this is a 50-cent price target, 10-cent stop. And then you just hit save, and now we can go to our template selector. You can see 50-cent price target, 10-cent stop. So with a trailing stop order, that is going to act kind of like the stop loss market order, where it'll go in like the stop loss order, and it won't get triggered until a certain point is met. So with the stop loss order there, if we have it at 10 cents, if the price drops 10 cents below your buy price, it's going to get you out. But if you use a trailing stop, if the stock continues to rise, then the trailing stop will follow it 10 cents behind. So if you're getting in a play and you're already in the green and you have a trailing stop and it keeps going up and up and up, if it does have a random drop all of a sudden, you'll be out in the profit with that trailing stop. So they can be very useful for that. And most traders probably should be using trailing stops, myself included, and I probably will start using them. But they are very, very nice to have, especially when you're day trading like that, or if you're swing trading and you got a stock that's on an uptrend and maybe you just want to keep that trailing stop right below that uptrend. As the price goes up the uptrend, the trailing stop will climb right below it depending on how far down you put the stop. So like I said, 10 cents, that's going to be a 10-cent trailing stop. If the stock price, since this is 114, let's say we buy in at 114, let's go ahead and trigger this and get the order put in there and see what it looks like, right? So you can see our limit order is in there and the trailing stop is kind of right beside it. Say this order gets filled at this 114 and the stock price goes up to 140, your trailing stop will be in there and it'll get hit at 130. So it'll continue to climb up as the stock price climbs, but if the stock starts coming back down and it drops 10 cents from the current price that it's at, then your trailing stop will get hit. So it can keep you in the profit in stocks that might be moving really fast, like a pump and dump, where you could be riding it all the way up and then all of a sudden it turn around. But because you have that trailing stop in there, you're going to lock in the majority of your profit instead of having to scramble and hit sell market or anything else. So the trailing stops, I definitely say, is a good stop loss for a lot of new traders to use. And you can use that with your ratio. So if you're looking for the 1-to-2 risk ratio, so you're risking 10 cents for 20 cents, then this can keep you disciplined by putting in that 10-cent trailing stop. And if the stock goes up to 20 cents and breaks over that and keeps climbing, well, then you can actually make more money than your profit target. And if it doesn't and it drops 10 cents, then you're out of the stock. So trailing stops, very nice to have. And just thinkorswim all around, being able to move orders up and down on the chart like this to wherever you want is just a nice thing to have as well. So that's pretty much it for this video. Like I said, I don't see any reason why anybody would use these triple and double bracket orders. It's too much. It's overkill. It'd just be crazy to use those. So if you have any questions, leave them in the comments below. I'll get back to you as soon as I can. If you learned something in this video, if you don't mind, let's teach that dirty algorithm a lesson and smash that like button.